All right, well, we're going to go ahead and get started. Good afternoon. Thank you so much all for joining. We're super excited to start the first of our free webinar series here at First Federal Bank. My name is Jessica Peak. I am the marketing event coordinator here. First Federal is one of the largest mutually owned banks here in the Midwest, and we are on a mission to help people build a better financial future through financial literacy, personal banking and lending, and mortgage lending. Our bank specialty is home ownership, so we're super excited to kick off National Homeownership Month with this webinar. We're focusing on comparing mortgage lenders and offers. So today you're going to hear from Dwight Williams. He's one of our lending advisors. He's a senior mortgage planner who's been with First Federal for over 8 years, helping families across the nation buy their dream homes. We are going to have a little Q&A session at the end as well once Dwight is finished presenting. So if you do have any questions, feel free to submit those in the Q&A, and we will review those at the end. And this is being recorded as well, so if you need to hop off for any reason or you miss anything, we will have this recorded and posted to our YouTube in a few days. So with that, Dwight, I will hand it over to you.
Awesome. Thank you, Jessica. I appreciate that. Welcome everybody. Over my time here at First Federal, I have come to the realization that my job is really kind of best. I want you to leverage myself or any of the loan officers that we have here just to get the basic information without trying to feel like you are being sold. And so today, what I really want to talk about is I want to talk about the loan estimate. I want to drill down on a few key things that I want you to know about your lender whenever you are talking to somebody. At any point in time, if you do have questions, just like Jessica said, throw them on the Q&A or on the chat box. We will get to those near the end and kind of go from there. So really what I want to do is talk about 3 key questions. These questions are going to be questions that are simple. They require direct answers. And these answers that you get are going to lead you to feel how that lender might be a good fit or maybe not a good fit for you. So the loan estimate, here's what we're going to do. We're going to talk about what it is and how does it help you. Then those 3 questions that we're going to ask as well is, what are your lender fees? What is my qualifying interest rate with your company? And are you charging any discount points or giving me a lender credit at the rate that you quoted me? So let's go ahead and start with the loan estimate. All right, so here what you have is you have an actual loan estimate that we have done for a client, but we have hid a lot of the information that's on there. What we want to do is we want to talk about, like I said, the items that we control. Now, on the loan estimate, this is going to be a very specific document that tries to make the process easier for you to understand everything that's going on with it. It's going to talk about if your interest rate is fixed, the type of product that you're looking for, if your interest rate is locked in. There's going to be a lot of different stuff on here. Now, I do have some notes, so forgive me. I'm going to look at these a little bit so I can make sure that I stay on track. I really want you to eliminate the thought that you need to have some sort of degree or have been involved in the mortgage business before to understand this. These are simple terms, simple questions to ask, and so we're gonna go through that. Let me continue here on to the next one. The 3 key questions, so that we're going to talk, they should come back with those direct answers. Now, the answers will eliminate most of the guesswork, so you know what terms you're really being offered. You can also ask follow-up questions based on the answers that you're getting, just to see if somebody is telling you the facts behind the quote that they're giving you, or if they're just trying to sell you on a loan. So it's my best advice before committing to any person that you obtain, who can help you obtain a mortgage, that you need to know the answers to these questions. So what are your lender fees? Lender fees, those are things that lenders control specifically about. Let me make sure I think I might actually be off my topic here, so I apologize. No, yeah, what are your lender fees? Lender fees are costs that a lender imposes to the borrower simply just to do business with them. Now, those fees can be a combination of origination charges. They can be everything from discount points. And we want you to really focus on the box that you're looking at right now with that loan estimate, box A is where you can tell what the lender is imposing on that specific deal. So the lender does not control your property taxes. Those are based on the house you choose. The lender does not control the title costs because you choose the title as well. And the same goes for your homeowner's insurance. All those items are going to be determined by what you pick. So every lender is going to have the same playing field, if that makes sense. Okay. All right, let's go on to the next slide. Okay, so what is my qualifying interest rate with you? Qualifying interest rate is a very simple term. What that means, at least in my opinion, is this is based on the loan type, the purchase price, the loan amount, and the credit score. So this has nothing to do with any additional closing costs. This has nothing to do really with anything other than those 4 items. So as we go through this, let me switch my notes here. The loan type, this is what you're going to deal with when you're talking about an FHA, a conventional loan, a VA loan, an ARM loan, things of that nature. Your purchase price, this is going to be the price of the house, the contract purchase price. Your loan amount is going to be the amount of money that you're borrowing after you subtract the cash down payment from your purchase price amount. And credit score, this is the one thing that is going to drive your interest rates or PMI charges the most. So the fastest way to save yourself $200 a month on a mortgage is to have as high as possible credit score. And it's not just with the interest rate, it's also with some other charges that can be played in there. Okay. Really the last question that we have, or the last statement that I want you to ask everybody is, are you charging me any discount points or giving me a lender credit? Now, discount points is a way for you to prepay interest, which allows you to lower your mortgage payment from the interest rate that you are qualifying for. That means that you will owe more money at closing because of that. Now, a lender credit is the opposite. Lender credit simply means that the lender is making more money than what they need. So they're going to give you a portion of that back at closing. And that actually reduces your total closing costs. So discount points, based on my opinion right now in this market, is really only it's a smart investment if you can recoup your money in a short period of time. Most people in this market feel that we're going to be in a refinance market soon. So the mortgages folks are taking out right now, these mortgages simply probably won't last very long. So if we're in these loans for a short period of time and we're spending, $2,000 or $3,000 in discount points just to bring our interest rates down, we have to make sure that we're going to recoup that money with whatever monthly savings we're going to have. And so that is really what your lender should be discussing with you, especially if they are talking about discount points. And if they're not having the conversation about how the math looks, ask them. Ask them why they're asking you to pay discount points. What is the benefit? What's the recoup time? Don't let somebody just try to show you a lower rate with looking at all of what goes into it. So, all that being said, measuring twice and cutting once. This is definitely a great thing. When you're talking to lenders, identifying these key critical pieces, this is how you will make sure that somebody who's quoting you an interest rate and another person who's quoting you the same interest rate, you're going to be able to tell who's got the better terms, because someone might have lower lender costs, or somebody might not be charging you discount points to get that same interest rate. So identifying the interest rate is important, but identifying what the lender controls, which is more than just the interest rate, the lender fees, the communication, the fact that they are listening to what your goals are and not just trying to write a loan for you, that's what you really want to look at. So what we've learned is that if your lender is not telling you the lowest rate without discount points, there's probably a reason. In the raising rate environment, business has slowed down enough to where this has shifted some lenders to just offering interest rates with discount points. And again, I want to be clear when I say discount points are not necessarily a 4-letter word. However, in the market that we're in right now, to me, discount points, you have to be very precise with how you're making that investment. If I will give you my opinion on whether I think investing money in discount points right now is a smart move, or possibly waiting until a potential refinance market comes back, then we can invest that money and even have a lower base to start from. So yeah, that old Carpentry term of measure twice, cut once, this absolutely applies when it comes to shopping for a mortgage. All right. All right. So hopefully we're not making this too long, but I did want to throw a quick pro tip at you. You do not have to submit a full application in order to get information from lenders. Now, it is a lender's job to make sure that if you want to apply for a loan to see if you get qualified, they absolutely take that application from you. That's our job. That's actually the law and what we're supposed to do. But if you want to have a quick conversation, you want to talk about scenarios, you want to figure out what somebody charges as their lender fees. These are all simple questions that everybody has available to them and access to. And again, if they're not telling you these questions, or if they're not answering these questions in a very upfront way, you've got to kind of start to think about, maybe you should do some checking around. Now, we would love for you to do business with us, and that's obviously the whole goal that we have here, but we also understand that there is a value that we need to bring to you in order for you to view us differently than other mortgage lenders. And our team is built that way. We're built on making sure we have transparent, factual conversations that involve how you're spending your money. Does it make sense? Is it the smartest move right now? And like a lot of our clients, we're actually talking about the second loan that they're going to get potentially if the refinance market comes back. So we're going to be mindful of a lot of these details. Now, I guess let's open it up for questions, Jessica.
All right, so like I mentioned earlier, if you guys, if you do have any questions, feel free to submit those in the Q&A. I do see a couple in there right now, so we'll go ahead and get to a couple of those. So I do have one in there that is, when do you think that the market will come back with lower rates so that I can refinance?
Oh, that's a good question. So one, my crystal ball is broken. It doesn't work. That being said, it's a question that is very popular. A lot of people are asking. The best rule of thumb on this one is, I feel with the changes that are coming down the pike, we have, elections coming up. The topics that people are talking about most right now have to deal with jobs, mortgage markets, interest rates, cars, manufacturing, a lot of that stuff. So to not avoid answering your question, but to give what I feel is going to be happening, I feel we're looking at around 18 to 24 months. I think that's a realistic timeline for us to be in a position for you to consider the option of refinancing. Not that that's when you're going to have to do it or when you should do it, but you definitely, if you see things that are happening on the news, if you hear chatter from your friends, your family, from your bank, whomever it might be, ask. If you have a trusted lender, call them. Hey, what are the rates right now? What about this with my credit score? Remember that pro tip. You can ask this to any lender and they should be able to give you any information. The lenders that choose to take it farther, that require you to hand certain things over, those are the ones you want to make sure that just kind of approach it with caution. Great question, by the way.
All right, I see another one in there. What additional criteria do I need to be mindful of before I refinance my VA mortgage?
Oh, love it. So VA happens to be one of our specialties. As a bank, our foundation is built really on helping a lot of veterans. It actually happens to be one of my expertise, but we have a lot of great loan officers that understand this dynamic. Now, with the VA loan specifically, the VA has implemented some rules probably around 3 or 4 years ago to protect some veterans. And what this is these rules mean that once you buy your house or refinanced it, let's just say a refinance, once you've essentially signed a new mortgage note, the VA requires 3 things to happen. One, you have to be 210 days since the day that you closed on your mortgage. 210 days usually equals around 8 months. You have to have at least 8 monthly payments or 7 monthly payments in place in order for you to even basically have the option of considering a refi. The VA also asks that you reduce your rate by 0.5% or a 0.5%, and they require lenders to make sure that you are recouping your money. So any cost that goes into the mortgage outside of escrows, so taxes and insurance, that money has to be recouped with monthly savings in 36 months or less. Without those parameters being met, the VA will not allow you to refinance. I hope that answers your question. And please, if you have more, we can go down some rabbit holes on that one.
Awesome. Okay, I've got another one. So not sure if I'm using the right term, but what is a buy down plan on interest rates, and is it something to consider?
It's a great question. It's essentially like discount points. Some lenders have reached into their pocket, and builders too. They're builders lenders. They will approach a buy down option, which means that we are hearing a 2-1 buy down, a 3-2-1 buy down. Now, what that means is the seller or the listing agent, whomever it might be, this typically, again, it happens with a lot of new construction, they will give the buyer a portion of funds, essentially kind of like paying discount points, where they will prepay the interest for 2% reduction, a 1% reduction, and then 0. It'll go back to normal. But that buy down, what it does is it reduces your payment on the first year, your payment slightly goes up the second year, and then it goes back to where it normally would by the third year, depending on if it's a 2-1 buy down or a 3-2-1 buy down. So the reason we don't like this product is because it feels a little 2006, 7, and 8-ish to us. And what I mean by that is that we are asking somebody to commit to a mortgage where their payment goes up over the next 3 years. Nobody really ever wants to sign up for that unless there's an incentive behind it. And one of the things that we have felt has been the best advice is, instead of leveraging those seller funds to temporarily buy your rate down, we would like to see you use those funds to buy your rate down permanently. Because remember, we have no crystal ball. We don't know if the refinance market's going to come back. But if it doesn't come back, now you have a rate that's permanently bought down versus just a short period of time. I hope that answers your question.
Awesome. Thanks, Dwight. Okay, I see another one in there. What if my lender isn't charging any lender fees?
Well, that can happen. And we actually know of a few lenders that don't charge lender costs. One of the things is that lenders aren't required to impose costs. One of the reasons why some lenders do that is they place a value on the process that essentially helps the client get from, I guess the front door to the back door is the best way to say it, is from the start of the process, all the people that need to touch your file, usually there's a dollar amount that's added to that. And some lenders will charge that amount. Some lenders will not charge a lender fee, but it doesn't mean that they won't make money. What they will do sometimes, usually, is they will charge you an elevated interest rate, or maybe charge you points on an interest rate that you qualify for, just simply so they can make that profit back up. There's many different games and ways that lenders can do this, everything from extended lock options. And I, again, don't want to go down this rabbit hole too far, but if your lender doesn't charge fees, you know the answer to one question. The second question you need to get, what's my qualifying rate? The third question you need to get, are you charging me discount points to give that rate? Now what you're doing is you're now comparing lenders based on qualifying rates with the added on benefit or perk of if they don't have fees. So if they don't have fees and they're qualifying you at a good rate without charging you discount points, got a good lender.
Awesome. Okay, I've got one more. Someone asked, does it cost any money to complete an application?
Zero, at least with us. There are some lenders that do charge money for that. We don't feel we are never going to become a booming business by charging everybody $100 per application. The way we make our money is based off sustainable clients, sustainable business partners, those clients who then want to expand, give their families the benefits of our checking accounts and our savings accounts and our money market funds. We go into it very deep. But with an application, you can simply just call, fill out some information, or have them help you fill out some information, and then just go from there. But it should not cost you anything.
Awesome. Okay, I just have one more come in about builder. What if my builder's preferred lender sent me an offer showing the builder incentives are buying the rate down for me?
So I actually have a client who's going through this, and the advice that I'm giving to her is, well, let's go back to that carpenter comment that I made, where we're going to measure twice and cut once. We cannot measure a builder's deal if we don't know where they start. So asking a lender, what is my qualifying rate, regardless of their influence or the company that they work with or the partnership that they have with the builder, we still need to know what is the lowest rate you can give me without charging me any discount points. Because as a consumer, you dictate how you spend that builder's incentive. Do not let them dictate how you spend that builder's incentive. There are some times where you will see lender or builder's incentive if you use that as your closing costs versus applying that to reduce your interest rate. What you might miss out on is when the refinance market does come back, that baseline could already be where your interest rate is. So that means you used their money to buy your rate down, but you did not use their money to pay your closing costs to buy that house. So I feel your best net investment in a scenario like that could be to weigh out your options. Okay, that's great that you can give me that interest rate with this much in points and the builder's paying for it, but what's the lowest rate you can give me without paying points? What does that look like? Now you have a place to measure from. And that is really the biggest piece, is don't let somebody start with discount points, give it the place to measure from. That's where you need to know what is zero.
Awesome. Okay, I don't see any more questions coming in. If anybody does have any questions, feel free to drop those in real quick. Don't think I see any more.
Yeah, these were some good questions, especially about the builder. I'm of the opinion that builders are in the business of selling homes, not building homes. That doesn't mean that they won't do a good job building your home, but you got to understand that anybody who's in business is there to make money. And granted, so are we. However, we want to be very transparent with you about how we handle it. And so with the builder, their job is to move inventory because they will essentially pay for it if they hold on to it too long. So just, maybe don't put all of your eggs in one basket when it comes to committing to a builder's lender, and always ask that builder if that incentive can be passed along to any lender you choose, not just ones that they prefer.
Awesome. All right. I don't see any other questions, so I think we've got everything covered. And that will wrap up today's webinar. So thank you so much for everybody for jumping on, for asking your questions. And I hope you're leaving this conversation with a way better understanding of, how to compare various lenders and how you can effectively shop for mortgages. So if anybody has any extra questions, all of Dwight's information is there on the screen. So feel free to reach out if you have any questions. Our website is there on the screen as well. So Dwight, if you have anything else.
I was just going to say that, if for some reason I'm unavailable, we have an entire team of people who are like-minded. We believe that homeownership is not just important, but it's also a potential way of creating possibly some generational wealth. So things that you can leave on to others. But we're also mindful in knowing that, we're not going to get the business from everybody. However, we do try and we do perform our work in a different manner than others do. So If you don't have a First Federal Loan Officer, I would encourage you to check us out. Go pick out a few that you might want to talk to and see what they can do for you. But thank you for your time today. I appreciate it.
All right, and like I mentioned at the beginning, this was recorded, so if you missed anything or you didn't catch something, we will get this video sent out and it will be on our First Federal Bank of Kansas City YouTube page as well here in just a few days. So thank you all again for joining, and we hope we'll see you at the next one.